Just to introduce myself and the panelists very briefly, my name is Jasel Chauhan. As Nicholas mentioned, I'm partner and head of international finance at Dickinson. I've been based in Greece since 2009 and certainly hasn't been dull during that time, not least over the last 3 years, and I'm sure each of our panelists will have their stories to tell as to what's been happening over the last 3 years or so. So with that, I'll briefly introduce each of the panelists from my left onwards. We have Channing Wang, who's regional manager at BOCOM, Bank of Communications Financial Leasing. Philipp Wuenschmann, who's global head of shipping at Berenberg Bank. Vassilios Maroulis, who's managing director and head of EMEA, shipping, logistics and offshore at Citi. Hugues, who's senior vice president and head of DNB's Athens rep office. And Konstantinos Petropoulos, who's general manager and head of structured and shipping finance at Piraeus Bank. So as usual, I think we'll go straight into the questions, and the usual topic is a general overview from the banks, each of the panelists, as to how they viewed, typically how they viewed the year before. In this case, it's probably closer to how they viewed the last 3 years or so. And also what they see for the immediate future, whether the following year or the years to come. Just to add a bit of context to that, obviously, as I said, it's never dull in shipping or in Greece. So to give a bit of context to that question, I guess it's important to know, clearly we've moved from financial crisis to recovery, COVID lockdown to vaccines, peacetime to wartime, low asset values to higher asset values, limited capital to excess capital, remote working to local working. So just a little bit of context there and a few topics to start. But in that context, I think just a brief intro in terms of lending activity during the last year, or the last 3 years, and also what happens next. And if that's okay with you, Channing, I'll let you start with that.
Okay. Thank you, everyone, and thank you, the Capital Link team, inviting me to come here again. And in the past, after 2 or 3 years, difficult time of life, finally we can see each other in person and enjoy the physical conference now. Yes, in the past 2-3 years, I think most of the people suffered maybe the difficult time of life, but there is still some good news, such as we have some the business growing very well. Our business also growing a lot. This is together with the shipping. The shipping community also growing after the pandemic. I can give maybe some single number to show that. As a Chinese leasing company, we have the shipping, BOCOM leasing, we have the shipping business, shipping portfolio growth maybe 30% in the past 3 years. We have the ship leasing portfolio from $12 billion by the end of 2019, grows to around $16 billion now. So we can see that not only us, we can also see some other Chinese leasing companies. They also keep growing in the past 2-3 years. I have a number. I learned a number from the top 10 Chinese leasing company, leasing house. I think the shipping business, the shipping portfolio, grow from the $60 billion to 77. Now they grow around 30% in the past 3 years. So how to say, now we have a significant share on the market, but in the next few years, in my perspective, okay, we saw the traditional banks also come back with very attractive terms, attractive solutions. We will try our growing, but maybe not so fast as in the past 2 or 3 years. Thank you.
Thanks very much, Channing. And I think that's probably laid down the gauntlet for our traditional ship finance bankers on the panels. And I'd want to come back to the leasing aspect and how that's developed. But before doing that, I'll hand over to Philipp.
Yeah, thank you very much. And sitting next to you, I'm here for the smaller numbers, but I can confirm that I think the last few years, with all the problems you mentioned, have been fairly good time for ship financing. We, as you know, Berenberg is asset-based financing, traditional asset-based. Last year we passed the $1 billion mark, which for Berenberg is a huge number. Not doing this on our own balance sheet, as many of you know, we have raised 3 funds. They are up and running, and so this is institutional capital which is behind us, and and they are basically happy with that investment, which is low risk and higher return than real estate and other alternative investments in the private market. That's what we're here for. So no losses, no defaults, good times, sun shines, and the source of business we had in the last few years were still very much linked to restructuring elements. So there were either banks or private equities selling portfolios, getting out of loans. So we were there to refinance some of the owners, which find a new home for that. So that source, I think, is to put a little picture on today. This source is definitely over now. So I think the time is over for bigger portfolio sales, at least in the main commercial shipping markets. There might be some offshore out there still, but for the rest, it's fairly done. Really, we are in a new era here. And what are the new sources? And this is then the look on today's market. Still, we are very busy. I must say the first quarter was very busy, and the second turns out to be busy as well. But at the same time, the incoming business is more on optimization. So we might talk about this in a minute. So there's a shift from alternative lenders more to traditional banks, maybe. This is a new source for us, and also obviously some early stages of renewal of your fleets. Yeah, that is renewal. I mean optimization of age profile of your fleet. So buying a second-hand vessel or a few, and then having a traditional finance. That's what we expect also for this year going forward, with all the uncertainties and challenges we have heard of. We'll talk about later, but that's it for now.
Thanks, Philipp. And it's interesting so far. It seems to be so far, you know, Vassilios and Hugues and Konstantinos will give their views as well. But so far, it's probably one of the most cheerful banking panels that we've been on over the last few years. Certainly the last 5+ years. So I'll leave Vassilios to continue the cheerful mood, if that's correct.
Yes. Look, it's been quite a ride the past 3 years, you know, ups and downs, but I think everyone who's in shipping is very much used to it. At the same point in time, I think the portfolio, as far as Citi is concerned, is probably at one of the healthiest positions it's been, as a result of the performance of the various subsegments. At the same point in time, direct contradiction to many other banks, we are not asset financiers, we are corporate financiers, and therefore fluctuations in terms of asset values and performance for specific asset classes, you know, as long as the corporate is there to be able to sustain, and this is the analysis that we do, and therefore on the back of that provide the capital, which is significant as far as Citi is concerned. Our global portfolio is in excess of $10 billion, and then that excludes export agency financing lines and underwriting capacity and other things. So all in all, we continue to be active. We are selective in terms of who we bank as a result of the fact that we are corporate financiers and require a specific level of activity. At the same point in time, in terms of how I see things going forward, I think we have clearly an extremely difficult and also terrible situation that is unfolding in Europe as we speak. That cannot be analyzed, and you know, one cannot foresee how things will go. But with the exception of that, and assuming that no terrible events transpire, then I do believe that most of the subsegments have a positive outlook as a result also of those events. So, you know, if I look at container, dry, tanker, and LNG, I think most of them for the foreseeable future are in a good place and one where we would look to invest and grow. So therefore, this is where we are, cautiously optimistic and of course with significant analysis, but at the same point in time, I think with the exception of a terrible accident, I think we are in a good place.
Great, thanks Vassilios. Hugues, I'll pass straight on to you.
Yes, I would echo what Vassilios said. Generally speaking, I think we've seen across our portfolio an improvement in the credit quality of our clients, and obviously this is always much easier to seek support to deploy capital to the shipping industry. So I think this is very positive. Banks are very well capitalized. I think most of the banks are reaching a Tier 1 ratio of around 20%. Which I think is well above requirements from various regulators. So I think banks have definitely capacity to lend. What we've seen, I think, as very positive for the industry, and I think this is based on the representation of the panel, is increasing diversity in the different sources of capital available to the industry, and I think it's a very positive development. Going forward, I think, as I said, I think banks are hungry for business, and I would say we maybe lack volumes today. I think because of very high asset prices, very high new building prices, we don't see a lot of activity on that side, and certainly, as you've heard from Shanning, I think the Chinese lessors have picked up a lot of the growth. So I think there'll be ample liquidity in the future. But as Vassilios said, I think there's a number of dark clouds. Inflation is there. Geopolitical tension is there to stay for a while. And I think, as it's been mentioned already in the previous panels, ESG will continue to be really high on the agenda, and I don't think it has really left the agenda. It continues to be very, very high, certainly for us in DNB in a number of aspects, and I think most of the large financiers in Europe and the US clearly have that consideration in mind.
Great, thanks, Hugues. And I want to come back to a couple of the points you raised. I think probably in particular, the diversity in the sources of capital and a lot of capital seemingly being there in the market as well. But before doing that, I want to hand over to Konstantinos, who's here as the representative of Greek banks in particular as well. So I'd be grateful for that perspective in particular.
Yes, thank you, Jasel. First of all, I would like to thank Nicholas and Capital Link for the kind invitation. It's great after the 2 years of the pandemic to be again in front of familiar faces rather than speaking in front of the computer mic. The last few years have been very productive for the shipping units of the local banks, and especially for Piraeus Bank. Over the period of 5 years, we disbursed over $3 billion in new shipping loans, out of which 1.2 billion was just last year, 2021. And that happened despite the challenges that were facing a local bank operating in a country that is coming out of a deep economic crisis. Capital constraints, non-performing exposures, tight regulation, and on top of that, the pandemic. Nevertheless, we stayed on competing with large international banks, trying to establish our own foothold in this market. Our strategy was to address the needs, the financing needs and zero debt for middle-sized Greek-owned companies, and on top of that, offer a comprehensive range of ancillary business. We are very proud that last year we expanded our service as a bank and had an instrumental role in the opening of the capital markets, the Greek capital markets for shipping companies with the issuance of the first 3 shipping bonds. We are very active in this sector, always looking for well-structured transactions with our good clients. At the same time, we are very cautious because of the new challenges challenges coming up. They were mentioned by the fellow panelists. We have some major transformation of the global economy happening because of the pandemic and the Ukraine crisis. There are serious short-term and long-term implications. We are already experiencing rising inflation, rising interest rates, supply shocks, sanctions, and the risk of stagflation. But maybe even more important are some long-term changes that are happening. The transformation of the global economic model from globalization towards regionalization. There is an increasing emphasis to resilience rather than efficiency as it used to be. Or we're going from the energy transition to energy security. We are closely monitoring all these developments. It's really hard to assess today what's going to happen, how this will affect the shipping sector, but these are really exciting times.
Great, thanks, Dinos. And I think what we'll now look to do is kind of move the topic slightly to in terms of financing option, deal type, and how that's changing going forward. But I think one of the things that picking up from what Dinos mentioned as well is it certainly has been a difficult time over the last 10 years. The interesting thing being that obviously almost at its peak there was a drought, there's a funding gap and not enough liquidity there. That's now developed to almost having too much capital, too much liquidity in the market. And I suppose it's in that context that I suppose look to focus and throw it open to the panel as well as to how does that almost complete opposite of the spectrum change your approach to new lending, and how do you approach new lending when there is available finance, excess equity and capital out there as well. I'd throw that open to any takers on that in terms of approaching it. Yeah.
I can kick it off. I mean, it's only because it's a very simple answer as far as as far as Citi is concerned. I mean, there's nothing that has changed in terms of how we assess credits and therefore how do we look at availability of capital. For us, it's not the asset, it's not the vessel, and therefore it's not 70%, 60%, whatever it is LTV. It is how the corporate looks like in terms of how we perceive going forward the financial strength or potential weaknesses that a corresponding capital structure has when we look at it. And on the back of that, we are able to deduce the various regulatory requirements that we have with regards to risk ratings and everything else, which effectively deduces our weighted average loss norms on the corresponding asset that we are looking to deploy, and on the back of that we price it. So it's not a this is the vessel, if it's young it's great and therefore we can do 80%, or if it's a totally different approach to which is consistent to how we have been doing business since the 1950s. So it's we look at the corporate as a whole. We require significant, if you wish, disclosure and of course corporate structures and everything else. And I think ongoing basis ESG concerns and considerations are key to deploying further capital, if you wish. But at the same point in time, I don't think that it's a rush to deploy capital just because competition is out there and there's a lot of assets and people are looking to deploy it.
Okay, great, thanks. And I think one thing that I wanted to come back to is with Channing and on the leasing side of things. Obviously, there were some fairly huge numbers, 77 billion, and going back to that funding gap, it's certainly a key area where leasing, Chinese leasing in particular, has certainly filled that gap to a very large extent. And I suppose that's to the point from maybe 5 to 10 years ago, leasing being almost part of the kind of alternative finance aspect. It's now very much mainstream. And I suppose in that context and also the growth, whilst there seems likely to be, with such a large portfolio, maybe a softening of that growth. How do you see that developing, and also fitting in with the traditional bank lending?
Okay. First, I want to emphasize that again, the 77 billion is the total 10 top leasing house, not only us. Actually, a very interesting thing is, I can recall that in several years ago, when I come to join some panel, I always sit in the panel. The topic is alternative finance solutions. So today looks like a little bit different, So I think maybe Capital Link team also think, okay, the Chinese leasing is on the list of the major options for the ship owners. So I'm glad to see that, and actually, I can show that the volatility of the shipping market, generate the diversified demand of financing. So I think Chinese leasing shared a bigger market, the share market, the share of the market, and we provide diversified, solutions to different ship owners. Actually, a little bit different with the banks. I think, we saw that also some other capital provider come to the market. Maybe the competition is stronger and more tough. But what we are doing is we try to do more flexibility. We are a leasing company. Definitely we have some difference with the traditional bank loans. Now what we are doing is we provide more operating lease. Okay, we can arrange more flexibility for the such like the pre-delivery finance, after delivery finance, also the residual value arrangement. So I think maybe that could make us have more attractive on the market and for the client. But another point I'm wondering, actually, we know that the capital is maybe oversupplied, some bond, some fund on the market. But I'm wondering, everybody knows that at the present market, the value price, the price of the vessels is very high, and the freight market is good enough. Yes, in the past 2 years, the market generates a lot of free money, free cash for the ship owners. So I'm wondering, how many ship owners, the players, would take the high cost money, or maybe the money with very high requirement, rate requirement to order new vessels at the current market, and also, project to develop a project very aggressively. So this is interesting.
No, it's a good point, and certainly on another one of the recent panels, I think, with Capital Link in New York, certainly from the CFO ship owner perspective, there was a lot of focus also on actually deleveraging and down. Just wanted to stick with the kind of alternative finance, or to some extent the more diversity in the market, and also how traditional banks are also adjusting themselves with that as well, and how the lending process is adjusting as well in the new market. Because certainly what we're seeing as well is, for example, traditional ship finance lenders actually lending to leasing houses as well. So, Philipp, I'll pass that question to you in terms of how you see the nature of actually ship finance lending perhaps adjusting, and traditional banks lending to institutions that actually lend then directly to shipping.
Yeah, I think that's has been an interesting development of the last 2-3 years probably. What is, I think, has proved to be useful in other industries since many years is to offer kind of back leverage or fund level facilities to those who are in the front line, and for us this has been a successful story for those alternative private debt funds who have a different risk appetite, so are able to lend probably at a higher risk-return profile to you, but at the same time have the requirement also to optimize their IRR return. So back leverage for them is an interesting option, and this for us creates then the option to be first lien again and be on this conservative side, looking at the asset, and still commenting also what you just said. This asset-based approach which we take still is obviously, in times where asset values are higher, more challenging in a way. Yeah, and we have to go more diligently on the asset to analyze, so to see what are the future readiness of those vessels, what have been done with the vessels. So this is a deep analysis on assessment on the asset. At the same time, we even if it's non-recourse, it doesn't mean that we does not look at the corporate as a sponsor or stakeholder in the game. So where's the skin in the game in terms of capital, but also what is the governance of those? And this is in the end, in the best way of the world, it's ESG, yeah, and this is part of our assessment today. So this is something where I expect going forward our offerings will change in the sense that we will ask you more questions on that side to provide us with data. So for you, it's the challenge to gather these data, to document to the IMO or to other bodies, but also to your banks. And I think this will be part of the assessment going forward. Otherwise, maybe last comment, if asset-based on net values, obviously we look more on the cash flow, we have to. In the container space, we did deals on cash flow base. The last, more recently, on other asset classes, we are still lending conservatively against the asset.
Thanks, Philipp. And I want to come back to just one of the points you mentioned, Vassilios, as well, but we were certainly going to speak about the ESG and principles fairly shortly. But in terms of the diversity, you mentioned obviously the corporate finance aspects. And I suppose the question that then leads me to is, to what extent, when you look at the corporates now, that do you expect that level of diversity as well, whether it's with capital markets, leasing, traditional finance, and generally, what's your view on that diversity, whether it as a competition basis or certainly that diversity of finance that is there?
No, I think first of all, the more the merrier. So therefore, I do not perceive either leasing houses as competitors or traditional shipping houses that do it on an asset financing basis. So it is the needs of this industry are significant. Where we are going with regards to, driven by ESG and the fact that, you do have a significant opportunity, I see it, but in effect the world fleet needs to be renewed slowly and steadily, and therefore the capital requirements for this to be done are so significant and such an opportunity for the ship owning community that we haven't seen something like this since Second World War. So therefore, as far as I'm concerned, each and every player in this market is required together also with the capital markets. So it's not will Citi be doing everything? No, it won't. But it's each and every piece of the jigsaw is required in order for the capital stack to be there, be sustainable, and be able to cope with the challenges ahead, but also the significant renewal and shift that will transpire. And it's not whether it will happen. It will happen de facto as a result of when the clients of the ship owners start to focus on Scope 3 emissions and all of that stuff. So it is extremely important, but I do sincerely see everyone here as part of one team, if you wish.
Thanks very much, Vassilios. And I'll pass to Hugues and Konstantinos as well. And certainly, that is definitely probably one of the strongest themes coming together with the diversity, that focus on ESG. And I think there's a lot of topics in that alone to discuss, but I suppose with that shaping how new business is done, also with the banks, how do you see more syndication, for example, and larger deals with prices happening, or more relationship banking linked with the needs of how finance will become greener? And if that wasn't enough, I'll add another topic on that question as well, as we're gradually drifting more to the ESG topic. And traditionally with that, there has more easily been a focus on the tier one owners, the very organised in ESG. And as on our previous panel, it's not just the E in the ESG. So, how is that dynamic likely to affect the lending policies going forward? Hugues, would you like to start with that?
Yes, maybe I just wanted to follow up on what Vassilios has said. I think, we certainly share the same views as Citi in terms of in reality, the importance for the industry and ship owners to actually have a diversified source of capital, to be able to tap many different capital in many different geographies. I think with the changes in regulations, we will see a need to invest in new technologies, uncertain technologies, which, certain, I would say, low-risk capital providers may not be there to finance. And so I think it's important to have a menu which is wide enough to equip the owners to that adapting world. When it comes to how ship finance will shape going forward, I mean, here talking about green, I don't really know if shipping is green. I think at best what we would be focusing on is supporting the transition towards decarbonization and the energy transition through sustainable financing. But I think certainly, as it was mentioned in the previous panel, for the large commercial banks, capital will be made available to those who have a strategy and to those companies that are transparent and willing to commit to certain targets. I think we don't expect companies to come up with completely realistic targets, because we know that technology is not available yet. But we certainly expect, based on the certain economies that can be made today, that investments will be made, and that we can see slowly a reduction in carbon emission.
Thanks, and I'll pass the same question to Dinos now, and I'll apologise for giving you the Greek focus continually as well, but I suppose a part of that as well is that obviously, as I said, with the ESG policies and have been in motion for some time with the tier one, the publicly listed owners as well. But in Greece, obviously, the small to medium size is a substantial market as a collective as well. So I suppose that's one of the areas in terms of, as Hugues mentioned as well, that there will need to ultimately be a bridge to that change as well. So how do you see that that focus in the Greek market in particular?
Obviously ESG is very high on our agenda. We feel the banks have a responsibility to educate their clients, especially where our target segment, as you said correctly, are the small to medium companies that are maybe less educated, less experienced with the ESG principles. So we have ourselves participated in several initiatives. We early on joined the SMS initiative of the IFC, and later on we were the initial signatory of another initiative by the United Nations Environment Programme, and ascribed to the principles for responsible banking. What we also did last year, where we had the first two sustainability-linked loans that offered a small margin discount to our clients, subject to meeting certain targets. This was not really big discount, but maybe it was a good compensation for the additional effort required from a company in order to comply with the reporting requirements for such facilities. So that was part of the education of the market. It's not much, it's not significant, but it builds a momentum. The investors are very serious. Our investors are very serious about the ESG principle. The bank is serious about that. The credit policies are being revised to incorporate these principles. So this gradually permeates the culture and permeates also the how we deal with our customers. They understand that ESG is very important to the bank. It's very important for the risk analysis we do. And so gradually with this it becomes a very important part of doing business.
Right, thanks, Dinos. And it seems again that very quickly we're running short on time, so we'll start to go through a few of our final questions as well, which perhaps haven't had the chance or the time to focus on the ESG even more, and certainly I think we could certainly spend more time on that topic. But one of the key things, which itself is a big topic, is compliance, market volatility, and it never seems too far away. Not least things like sanctions and even today further development of EU sanctions, which is likely to affect all markets as well. In view of the time, I'll throw it open to the entire panel. But ultimately, what is that? In what we've heard the words healthy, portfolios in the billion, positive outlook. And these types of things, but there is always that risk of volatility. So what is the biggest concern? Another thing that actually I was discussing with Hugues prior to stepping onto the panel was that popular phrase, which it only takes 10 years to forget the mistakes that we made last time. So on that topic, and also with the ESG push, is there going to be a focus on financing new buildings as opposed to second-hand, and those two aspects? So, kind of two questions there. One in terms of how will volatility affect, and what do the panelists see as the biggest risk going forward to ship finance? And ultimately, will there be a change in that dynamic to new buildings, for example, and a focus there to try and couple the changes, whether on ESG or other compliance aspects going forward? I'll throw that open to the panel if there's any takers.
I'm happy to start. I think for me the biggest, sanctions has existed for a very long time, and many countries have been sanctions, and banks had to navigate through this challenging environment. But I think for me the biggest unknown really is the changes in regulations. We know of certain changes that will arise within the next 5-10 years, but we don't know about the next changes. And we are long-term providers of capital. We commit money for 5-7 years. Our friends in China can go much longer than that. And I think the big uncertainty is what will the new regulation have as an impact on the actual value of the assets and the residual. I think in the past we've always accepted to assume a certain high level of residual risk with large balloons. And I think this is where I think banks struggle in general. To understand what would be the economical life of ships in this uncertain environment. I think certainly this is also something that our clients struggle to evaluate and not transpire into, I would say, a fairly subdued activity in the new building market for a number of segments.
If we speak to clients, our impression is that many of you are still, let's say, in a kind of waiting position, maybe also short term because of that situation with a lot of uncertainties. But also more midterm with regard to this not finalized regulation, which is especially the EU taxonomy, which is not clear yet, has not been approved finally. And obviously also everything around fuel and propulsion, where still the whole question of infrastructure and the ways to deliver this to the ships is unclear. So we see you all hesitating. Maybe that's good for those who have vessels in the water, because the order book is not swelling. But I think still at the same time, this is just a temporary period maybe where all of you have the time to prepare for that, and we as banks, I think we have to prepare, everyone of us here sitting here with different models maybe, how can we, if you then have decided and made the decision, how can we support you on that transition with new buildings? Yeah, that is important, and we need various sources also there. Chinese leasing is obviously one big source, but I guess certain diversity also for new building financing is in the interest of everybody.
Okay, maybe I want to say, sorry, okay, I want to say just 2 points. The first, as Philipp just mentioned, Chinese leasing, as the newcomer, but now maybe we are one of the major options on the finance market. We developed more actually the operating lease. This is also what we are trying to, the operating lease, we began such kind of model with some end users on the market, the top end users. We try to provide more attractive terms with them and encourage them to, to build the green vessels with more advanced energy, population solutions. This is what we, all of the Chinese leasing companies is not joined such like the Poseidon principle, but what we are doing is to try, also keep moving on this way to proceed the ESG principles. And the last point I want to say is about the challenge maybe in the next few years. I come from China, and the Chinese leasing company also developed very quick in the past 2 decades. China joined the globalization since 1980s reform and open. So, but now we think maybe the biggest challenge in the next years is the deglobalization. We saw that a lot of noisy and from different medias, country. Maybe I come to see what's the biggest problem the voice come from, but everybody can show that maybe this is a trend. I think this is the fundamental harm for the shipping, for the economy. Actually, I think shipping is one of the biggest beneficiary of the globalization. Such like, the Greek shipping build the vessels in Far East, and now also fund come to support, and then transport the goods, Trans-Pacific or Atlantic. So I hope this will not happen, and the globalization could continue, and all of the business could be benefit as past. Thank you.
Vassilios.
Yes, so look, I think I'll echo what everyone has said. I think there are significant headwinds in terms of potential challenges one can look at, a potential upcoming recession, inflationary pressures which are significant, interest rate rises that are coming, ESG and how that develops, and of course, deglobalization and everything else. But I think that's what makes this extremely interesting. I cannot see a significant impact with regards to how important this industry is, given that, whether one likes it or not, 90% of world trade is carried on vessels. So I think even though there are significant potential downsides, at the same point in time, the opportunity is also significant in terms of, and therefore it makes it really exciting, and so it's an interesting challenge to try and address.
Thank you very much. We've overrun our time, but Dinos, if you wanted to say the last...
A very short comment.
Sure.
I like what Vassilios just said. shipping will survive. I mean, it's no question about that. I mean, our challenge as a local bank, perhaps a different challenge, is to ensure the internal capital allocation in our own organization. I mean, we are a bank that is active in various sectors, and shipping is a very small part of it. So it's very important that at the end of the day, we make the returns that our shareholders expect, and we have a risk that is acceptable to our committees and according to our policies. So this is the biggest return, given the uncertainty we have in this sector.
Great. Thanks. And we have actually overrun our time allocation, which I think probably hasn't happened for at least 5 years. So I think that's probably one of the most positive signs of a bank panel when there's so much to talk about, and certainly a positive panel so far. But as we are behind schedule, I'll pass back to Nicholas now and thank our panelists.
Great panel.